Good morning. Steve Free in Chicago with the morning grain comments. Last day in the hotel. Mother Nature is welcoming us in a new home with a thunderstorm with possibly hail as the front moves out of Arkansas and Iowa into Illinois. There are also history of some tornadoes in this system. As far as the markets are concerned, beans down 9, corn down 5, wheat anywhere from 13 to 17 cents lower. The stock market's a little bit lower, dollar's a little bit higher, crude's a little bit lower. As far as news overnight, it looked like Jamie Dimon said that the bank crisis isn't quite over and could last for a longer time than what we're trading. Also, as soon as he said that, the Swiss government came out and said they'll investigate the merger or takeover of Credit Suisse by UBS. In the grains, I think the bean market right now is trying to even up in front of a long U.S. holiday weekend. Brazil export prices continue to trade lower, while the spread in the May-July soybeans is out to a new high, suggesting here in the U.S. that we need to buy beans from the warehousemen for the crushers. Nearby crush rates, though, dropped below $1 in the May, and Brazil premiums continue to drop as they search for demand. So we're just kind of wondering where China is as far as buying beans from Brazil for crush. Argentina weather taking a backseat to the fact their crops are smaller and their economy is lower, and that they'll have to import beans for their crush. Seems like the oil market is gaining on the meal market. Again, meal domestic premiums are softer, although we are hearing a few cargoes of meal and DDG from U.S. going to Europe because of the lower meal export outlook out of Argentina. We also note that we're going to get export sales tomorrow and get a better handle on the demand export for U.S. beans. April 11th, we got the USDA report, which will define the 2023 soybean carryout, which some people have as low as 170. Most people are in the 190 range. In the corn market, again, farmers selling. The May contract was probably a little bit overbought. We're back in the trading range between 640 and 660. And market probably is evening up in front of the long weekend. And looking at ethanol data today, export sales data tomorrow. In the wheat, you have the GFS model showing rains in the southern plains. The European model has a few rains on the 10-day map, but mostly focusing on the eastern part of the area. Western hard red runner wheat farmers are depressed because of the 60-mile-an-hour winds, low humidity, and impact that has on their wheat crop. Wheat market also had heard some stories about wheat coming in to U.S. from other origins. Russia continues to have the lower prices. Europe wheat looks to be the only exporting country that will see an increase in supply in 2023.